The $9 billion exit. Why MicroStrategy's infinite money glitch just broke. I mean, this gentleman right here just can't catch a break. I guess that's what happens when you start a Ponzi-esque system, right? I'm not calling a Ponzi scheme, but it is definitely Ponzi-esque. Let's be real. Now, this video has been inspired by this gentleman. Now, I know he is a MicroStrategy bear and he exaggerates and perhaps does not present the entire truth, but I do want to give credit where credit is due. He did indeed inspire me to make this video. Now, on January 15, 2026, the most aggressive corporate finance experiment of the decade officially ends. Now, here's where the deception happens. It has not officially ended. Essentially, a new rule is into consideration and may be applied January. And this rule has a catastrophic effect on MicroStrategy. Effectively tried to hack, right, MicroStrategy, the stock market by turning a boring software company, which is what they were, into a leveraged Bitcoin treasury. And absolute insanity here. It worked until it didn't. Now a boring index rule change is forcing robots to sell 9 billion of the stocks. And again, here, it looks like they might have to sell more like a couple billion, not 9 billion. 9 billion is the most extreme estimation, but billions of dollars in stocks. And also you have to think about future revenue because a lot of people are buying index stocks, right? Killing the premium that made strategy amazing. So this company, right, MicroStrategy, is getting wrecked in real time. In my opinion, the real cause is due to this particular structure that they built, right? So this rule is forcing companies who have greater than 50% of assets being Bitcoin, they will no longer be considered anything other than a holding company, essentially. So Michael Saylor spent 5 years building a machine, and if you're considered a holding company or an asset company, then you are no longer allowed to be in the index. That's the rule. And after 5 years of building this Ponzi-esque system, we're gonna go a little bit deeper in a minute, buy Bitcoin with shareholder money, right? Stock price goes up, raise more money, buy more Bitcoin, repeat, right? So this is the system that he had built, right? Buy BTC, stock price goes up, and then raise money, right? By selling more shares and then buying BTC. He had this thing on lock. Okay, it was absolutely insane. I remember when this was happening. I mean, I was telling everyone this is a disaster waiting to happen. It's just too obvious. Everyone can see, but the greed kicked in. Everybody was happy, right? We were kind of in a desperate situation and it worked flawlessly. I mean, MicroStrategy accumulated 649 plus Bitcoin worth $57 billion today, and this was worth a lot more. And in fact, had they sold at the top, they could have cleared any debt they had and they would have been able to hold Bitcoin risk-free, have billions of dollars for operation and just coast, right? But you know, this debt Ponzi-esque financial system that we live in thanks to central banks promotes, motivates, rewards ever greater leverage. So they became the largest corporate Bitcoin holder on planet Earth, and it just wasn't enough. Imagine the greed, being able to raise these billions of dollars. You're gonna suck up all these management fees and do this and that. It's like it feels good to hold all this stuff, but you know, like Warren Buffett said, when the shore comes back in, then you'll see who is swimming naked, right? So it's a very, good analyzation. So MSCI's rule is simple. When cryptocurrency exceed 50% of your assets, you're not a company. You are a fund. And honestly, I agree with that. Let's be honest. MicroStrategy is at 77%. They crossed that line months ago, right? So they've been raising and raising and raising. Now the glitch, because the stock was expensive, right? Back then, you couldn't buy BTC, okay? There weren't that many quote unquote treasury companies. They were the initial one doing this, right? So they had a significant edge. They could issue new stock to buy more Bitcoin, which raised the value of the old stock. It was a self-reinforcing loop that generated 15 to 20 billion in excess capital. And the reason they call it excess capital is because the value of the assets that they held, let's say the value, right, was over here, but the market cap was way over here. And so the difference between this, right? So this was, you can call this the premium, right? So this is what they had. And with this premium, each time they gave out shares, the premium remained, so they could continuously in perpetuity keep raising money by selling these shares because they had a premium. So you just sell into the premium until your premium evaporates and you hold all these Bitcoins, right? And that's what they were doing and are still doing, really. They're still buying even till today. And in fact, when this news came out, MicroStrategy actually had to announce it, right? They had to make a post to say, look, we don't care what the indexes say and blah, blah, blah. Saving face, right? But this is very important. This is very big because with this rule being gone, this premium that allows MicroStrategy to buy all these billions of dollars of Bitcoin evaporates, right? So the takeaway, without this massive premium, issuing new shares to buy Bitcoin doesn't create value. It just dilutes shareholders. And the money printer essentially evaporates, right? Because they could literally print money. It's insane. And because of this desperation, right? Because after a certain point, they just couldn't offer these regular shares. They had to offer more and more exotic types of shares and essentially borrow money to buy more and more Bitcoin and take on more and more risk. And funny enough, this is their own presentation to investors. You couldn't make this up. I mean, I think when they are going to talk about lessons about this situation, it'll just be too funny. It's like, well, this was obviously a pyramid scheme. Why didn't anybody say or do anything? It's just when you're in the moment, it's too hard to accept, right? But it's just blatant. It's obvious, right? And this might even be a joke that they did, like, you know, like, I mean, it's just too blatant. So the Strategy's investor presentation doesn't even hide the mechanism. A literal pyramid diagram shows the capital stack. At the base is 120 billion in common equity. This is what we know, right? Backed by 71 billion in unencumbered Bitcoin. Above that, preferred shares, 1 billion of Stride, 1 billion of Strike. And when you talk about these types of shares, I mean, you're talking about exotic stuff, right? So Stride is a perpetual preferred stock from MicroStrategy that pays a 10% annual dividend in cash paid quarterly. Okay, they paid this money quarterly. This Bitcoin is just sitting there. It's not generating any money. And yet they're gonna sell shares as debt pretty much and buy Bitcoin with that and then now pay a dividend. Where is this money coming from, right? More on that in a second. It is a high yield subordinate credit instrument, meaning that it is subordinate to other preferred stocks in the capital structure and has a high risk but potentially higher returns. So people buying this stuff, they just want to make a lot of money, right? And they're taking a huge risk. So this company is now a leveraged long bet on Bitcoin, and Bitcoin's price has to keep going up. That's why when Bitcoin price goes down, it's kind of like, oof, what are these guys doing, right? So MicroStrategy has a total of $8.22 billion of debt. And this debt primarily consists of convertible debt securities issued to purchase Bitcoin. So they depend on Bitcoin price to remain at least above a certain amount. If it goes below that, they could potentially get liquidated due to the pressures, etc., etc. And on top of that, they have now new liabilities that they have to fulfill every single month. This is the annual dividend yield. So, MicroStrategy made $120.7 million in total revenue in the fourth quarter. So this is their real business, okay? That's not part of this Ponzi-esque system. This is their real business, $127.7 million. You can't do nothing with that when you're dealing with billions of dollars. That's like $0.1 billion. Think about that. That's just not enough money to do anything when they have this amount of debt, right? Which was a 3% decrease year over year. So their business is decreasing year over year. Now, while its total software revenue is declining, the company's subscription service revenue is in a growth area, increasing by 48.4% to 31.9 million in the same quarter. 31.9 million. Okay, now we're talking about $0.03 billion. So this is what we're talking about here. $0.03 billion versus $8.22 billion of debt. I mean, any sane person would look at this and be like, nah, that just doesn't add up. Doesn't make sense at all. Now, the company also had a net loss of $670.8 million in Q4. This is not a company that should be buying Bitcoin at all. Okay, you're buying Bitcoin with your own extra money, no issue. But this structure is just shaky. And that is why they have to keep going up this ladder of extreme and more extreme risk and offer these very exotic, very seductive. Who wants to pay 10% on an asset that is unproductive? No sane person. And that is why this makes no sense whatsoever. But of course, it makes sense when you look at it from their perspective, right? So the last time MicroStrategy had a nice bump was in 2000. Ever since then, it was dead. Imagine you bought this company back here, right? And then you got to ride this thing up. And if you were smart, you sold. But hey, most of us will probably held, right? If you buy this stuff, you'll probably hold because you think it's going to go up forever. That's why you invest in this company. But then reality hits and the premium expires and it just becomes something unstable, right? And once it's removed from the index, I mean, how much further will it go down? Because now it's essentially at a one. Right now, it's at a one. The market cap is about as close to the amount of assets that it currently holds, right? So if we search for the assets here, so right now it has about $57 billion worth of Bitcoin, but its revenue or its market cap is about 50 billion. So the premium is pretty much gone. So you might as well buy in a regular holding company that doesn't have all this leverage, that's not at risk of getting liquidated or anything like that, right? That's way better than this high risk holding, which doesn't give you any real benefit. And that is why I'm saying this Ponzi is unfolding. Not just me, but many people. But again, the decision is coming right around middle of January. So this is not conclusive yet if the will be excluded from the indexes, but you gotta admit, it's looking really rough. And when you take this market cap into consideration and this Ponzi-esque nature, of course, it's not a full-blown Ponzi. I wouldn't categorize it as a full-blown Ponzi, such as Bernie Madoff, who had the biggest Ponzi, I believe, ever. But I mean, 50 billion, it's getting close. You gotta admit, it's a big bubble, right? And I would consider it a Ponzi, considering they make such little money and yet offer huge dividends. I mean, what is it other than a Ponzi? With that being said, stay safe out there. And I want to give a special shout out to the Patreons. Salute, soldier.